Sounded good right there. Hey guys, the shot is looking good, man. This the last round of the season. But let me hit one more shot and I'm gonna talk to y'all 1 second. Let's have a quick chat because we gotta talk about something. What's up, y'all? This your boy Jay Wayne, you know, representing Team Take Profits. And I just wanted to take a moment out here golfing, but just take a quick little moment and talk to you about what was on my mind real quick. And something that I was thinking about was I want you guys to have a plan, a good plan, right? A good plan, not just a plan, a good plan with good execution. Because you can have good execution, but the plan is terrible. All right, this may be debatable. Comment below, let me know your thoughts on this. But I believe you got good execution and you got a good plan. That's a winner all day, right? But the execution is not always gonna be on point though. So I really want you to spend time on getting a really, really good plan. All right, this could go anything in life, but I'm talking about trading. I want you guys to have a good plan, a good entry, a good trade setup, a good plan, a good risk management situation, a good plan. And so if the execution is a little bit off, you'll still come out as a winner. You might not get all the pips that you wanted, you feel me? But you got close to it because you had a good plan. A lot of people is coming in here with iffy plans that are not that good. And the execution may be okay, but it still doesn't work out. For an example, you got this strategy, right? Alligator strategy, whatever type of strategy, right? So that's the plan, right? The rules is the plan. And you may execute it, all right? But it still doesn't work out because the plan is terrible. The plan got you going against the trend. The plan got you, entering on unnecessary breakouts. You know what I mean? When it was cause for a pullback. I'm trying to think right quick of what it could be, but I'm going to show you some examples too, following up with this message. I'm going to show you some examples on both sides. Good plan with good execution and bad execution. And then a bad plan with good execution. And it still really doesn't work. So I want you guys to focus, all right? This is the weekend, but I want you guys to get ready and focus for next week of trading. And I want you guys to come in with good plans, all right? Good plans. And I want you to try your hardest to have a good execution behind it. But just know, as long as you got good risk management and you try to get as good as execution as possible, you still come out pretty good, all right? Let's dive into the charts and let's show these examples. Let's get it.
All right, team. So here we are on the chart. This is a 1 hour GBP USD. And I'm going to show you a bad plan with good execution. All right. So what I have here on my chart is two moving averages, a 8 and a 15. All right. The 8 is the one that's blue. The 15 is the orange. And this individual, I'm just making up scenarios. This individual wants to take a buy when the moving averages cross above, right? 8 and 15 is a one. There's a lot of combinations, but 8 and 15 is one that a lot of people like. And so this individual wants to take a buy when the moving averages cross above, just like this example right here. All right. So that's what they want to do. So that's their rules. That's their plan, which I don't think is good, but let's just play it out. All right. Now, here's here's where the actually the candle closes above, but the moving averages are not crossing over yet. So let's let them cross over. There they go. So realistically, they're probably going to get an entry about right here, somewhere right up in there, and that's their execution. So they executed it right. They waited for the crossover. They didn't jump the gun. But the reason why it's a bad plan is because why are you trading in a downtrend? Why are you taking buys in a downtrend? Why are, the moving averages are going to cross back and forth all day long. Even in the consolidating market, they're going to cross up and down. But you can't recklessly take, those crossovers. You know what I mean? And that's what a lot of people are not being taught. They just taught that, but they're not taught the market structure and all of the stuff that you need to know with the moving average crossovers. So that is a bad plan. All right. Now, sometimes you might get lucky and the market just continues to move up in your way, but I don't think that that's long-term sustainable, because you need to practice good habits. You're going to get ate up way more than you win doing that type of stuff. So my thing is, why not put up a moving average like a 50? Because the 50 is going to show you what side of the market you're on. A buyer's market, a seller's market. So let's go and add the 50 to it. Okay. So if we see that this is a downtrend, because look, I marked them off right here, right? So then why not wait for the moving averages to cross to the downside? You know what I mean? Why not wait for the blue line to cross below the orange until market pushes past this level right here? Let's just look for sell opportunities. Let's wait for the blue line, which is the 8 moving average, to cross below the orange one. So, you know what I'm saying? Now that, to me, if you're going to use the moving average, just throw the 50 on there so that you can know if you're in a buyer's market or a seller's market. Look at the overall structure of the market, see if it's making highs or lows, and then wait for the moving averages to cross to the downside. So here's an opportunity right here. Wait for it to cross. Okay, I think it's right about here. I think the moving average just crossed. We're waiting for the blue one to cross below. Let me see. Okay, it's coming right there. So if you're going to do the moving average, why not just wait for it to cross? Now here's your entry, and you can just run with that. Now here's the thing with the moving averages. I used to use the moving averages all the time, but it's always a late entry. It's always a hiccup somewhere, seems like. So, but I'm just saying, if you're the moving average type, then go ahead and run with it and be committed to it. But you need to use it in the right context, the right situation. But as you can see, they always get you in just a little bit late, as you saw when I was replaying it. You know what I mean? Because I would have already had an entry on this trade, but you're still waiting. So you probably would have got in here or right here. These are where probably your entries, right here, here. So let's just say somewhere in the middle. Let's be realistic. And here you go. Now that was just a news candle, so you probably wouldn't even took it if you knew news was there. But let's just act like this never happened. So the chances of you pulling this off is greater when you have a good plan. Even if the execution is not all the way there, you were on the right side of the market is what I'm trying to get at. So even if you got in the execution wise, as far as you got in a little bit late, you would have got something out of it because you were on the right side of the market. You had a good plan. I'm going to show you one more example. You think that this is a low, okay? You think that that's a low. What are you going to do? You want to take a buy? Okay, so you see the market trying to push up. So for whatever reason, you take a buy. All right, it works out. And you want to take a swing trade because you want to play this. You want to play this pullback. And what happens is you take this pullback. Let me put an arrow up here. You take this pullback and you think and you don't know when to take profit. you don't know, where is the friction point in this area, and you hold it a little bit longer. Remember, this is swing trader thinking, right? I gave you the scalper example. This is more of a swing trader example. And holding it for a couple days, and all of a sudden, bam, market just hit a friction area and turns around, and you had no idea. You know what I mean? You had no idea. Now, that is a bad plan, because that is not knowing where your targets are. That is just holding a trade for days and days because you hear swing trading is the truth and you can make a lot of money, but you don't have any idea where your profit targets are. So the way that I will go about this situation is, which is a good plan, is look at what the market gave you in the previous weeks. So you got this low point, you got this high point, so you got to start building it up. So you go from this low, use a Fibonacci retracement tool, plot it at the low point, and go up to the high point, which is up here. All right, so this is what you got. Now you mark off the golden zone. All right, and the thing that you love about it, and you take note, is that in the future, from that point, you got a little, they call it a little hezzy right there, a little hesitation right there, a little consolidation. I call it a little hezzy. So cool. So now you already mapping it out. So now if you're going to take a buy here for whatever reason, I'm not justifying it, I'm not saying, but at least you know where your targets are. You know what I mean? And remember, this is starting to become a downtrend because price is moving lower. The pullbacks are great and the drop-offs are great. So the market is, trending the opposite way. So you know where to take your targets at. And you also know where to get back into the trend at. So, all right, so this person takes a buy somewhere down here for whatever reason, all right, and they swing trading and price is starting to get to their point, boom, they take profit. But a bad plan is to just hold it and not have any idea that this level is even coming up. But a good plan is taking profit if you're going to do it, taking profit up here. But also the best plan is to take buy opportunities off of this pullback. This is where I would have took buy opportunities from. All right, that's where I would have took the buy opportunity. I would have noticed this pattern here, and I would have marked off, I would have cut the head off and waited for that handle or waited for that shoulder move, and that's would have been my entry. I think that is a good plan. If you're gonna take a buy, there's no way, let me delete everything. There's no way I'm gonna take a buy just because it is consolidating. I don't know, it could go lower. But once you get this impulse move, which is here, and then price pulls back and it's showing that is holding, then I take the buy up. So I like that opportunity better. And then also I know that golden zone was sitting right here. So I know when my entry is from here, I know my take profit is at the golden zone. And then I can look at taking sell opportunities up here. This is where I would take a sell at, because the past is showing me that we're going lower, 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 and this is lower right here. This is lower than this. So we're just going lower. Look, lower, lower, lower. So why not? A good opportunity would be this. So a person would just sell, right? Another example, a person would just say, hey, we are at a golden zone. Let me just take a sell. I don't really condone that. I say, why don't you just put up a trend line, mark off the friction point, because the trend line is touching these 2 points, this friction point and this friction point. So put the trend line there, and when it breaks the trend line, let's take a sell. So all in all, guys, I hope you understand. I want you guys to come in with a plan, with a good plan. And then I want you to try hard to execute that plan. But just know, when you're using risk management, and you try your best to execute a plan, and if it doesn't execute all the way as you expected it to, you still should be okay, because you use risk management, and most of all, you have a good plan. I just wanted to encourage you guys before the trading week starts up. We've been through this election week, and you know, we're about to get into Thanksgiving, so I want you guys to kind of trade cautiously, but I want to drop these videos to get our mind right, so after the holidays is over with, we'll be ready to go. So be looking out for more videos like this to get our, you know, psychology intact and sharpened, you know what I mean? And I'm doing these videos because I want to see you win. I'm doing these videos because I want to help as many traders as I can become profitable, so they can get their time freedom back and start empowering people around them. So let's get this channel up to 200,000 subscribers. If you haven't subscribed already, please do. And team, don't forget, I'm doing a 20 pip a day challenge. So if you guys want to be a part of that, it's still time. We're going live for London session, and we're trying to catch these 20 pips a day. And right here on the screen is a link to the series that I've been dropping. Check it out. Hey, don't forget to like this video, comment, subscribe, and let's make this money, baby. Peace.